Alrighty, so let's get into this, folks. Meta up here. What's going on here? Will this stay easy money? If you put money in Meta stock, is it still easy money? Okay, let me share my opinion perspectives here. This is huge. Meta had what's called a blowout quarter. A blowout quarter is when you just come in and obliterate numbers, obliterate them. That is what Meta went ahead and did. Okay, the earnings per share came in at $7.14 versus $5.92 was expected. Oh my gosh. The revenue came in at $47.5 billion versus $44.8, so almost a $3 billion beat on revenue. The guidance came in with a midpoint of $49 billion. Analysts were expecting $46 billion. So that's about $3 billion. And guess what Meta comes in and does? They come in and beat the numbers they always project. Like if you look at the last number of quarters, they come in and beat. So don't be surprised if Meta comes in and does more than $50 billion of revenue next quarter when they come in and report. Do not be surprised at all. At all. Okay, think about what they just did. They did 47.5 in seasonally a weak quarter, and a quarter that was dealing with the tariffs and all that drama, and probably a lot of companies and businesses were probably cutting back on ad spend because they didn't know what was happening with the tariffs, and they were confused, and consumer confidence was so low and everything, and Meta came in and still just blew it away, right? Daily active users came in at 3.48 billion. That's compared to estimates of 3.5 billion. Here's a deal, $800. It's incoming quickly. Quickly, we're going to be over 800, and then we'll be talking about 850, 900 before you know it, okay? When you come in with these numbers, it's going to happen rapidly, okay? Now, this shows you how dominant these numbers really are for Meta. Revenue up 22%. Think about the stage Meta's at right now. You would figure this is a very mature company right now. Like, you know, there's no way they could still be growing 20% plus revenues. Yep. Here's my hunch. I think WhatsApp is actually starting to become a meaningful revenue driver for the company. Just wait to see the WhatsApp revenue as it pours in. They're not going to disclose it, but it's going to really start pouring in 26, 27, 28. But I think we're just getting the infant stage of that, and I think that's why you're seeing that revenue bump there now to 22%, because WhatsApp's just oh my gosh, like that's just a gold mine opportunity of revenue and profitability increase for this company over this next few years. Cost and expenses only up 12%. Huh? Revenue up 22%, cost and expenses up 12%. Your cash from operations and your net income is going to fly. So income from operations was up 38% year over year. 38%. And remember, this quarter last year was a banger for Meta. It wasn't like this was some like bad quarter for them and they had easy comps. The comps were tough. The numbers that they were reporting at this time last year were great, phenomenal. And yet they still came in with 38% growth on a year-over-year basis. Or anybody think they're selling NVIDIA chips? It's unbelievable. Net income up 36%. Diluted EPS up a shocking 38% for this company on a year-over-year basis. I mean, where else would you rather be in big tech than this, right? Nowhere. You know, you look at NVIDIA. NVIDIA's a banger. They got great numbers after great numbers. But here's the issue with NVIDIA. NVIDIA is counting on Meta, Google, all those companies continue to spend. Eventually, they're going to slow down their spend, all these companies. I think you start to get the hints of the slowdown in spend in terms of the increases in 2026, right? Meta, meanwhile, they can just keep posting their numbers. And remember, Meta's spending a fortune on all these NVIDIA chips right now, right? And they're going to be spending a fortune on AMD chips. But remember, folks, I'm trying to see the live time after hours moves as well right now. I got CNBC on right here. But remember, folks, like we haven't even begun to see the real revenue come in from all this AI spend Meta's doing. You're seeing very early glimpses maybe, but like you're not seeing the big money yet. The big money, we're talking 3, 5, 7 years from now. That's when you're going to start to see, oh man, all this money they spent on NVIDIA chips, AMD chips. Wow, that's a big deal. We're not even at that phase yet. Like, just wait for that. That's a few years from now, folks, okay? Now, additionally, cash and cash equivalents, marketable securities came in at $47 billion. Cash flow from operating activities came in at $25.5 billion. Headcount only up 7% year over year. I mean, when you guys are revenue up 22%, headcount only up 7%, Meta's running lean and mean, okay? Now, additionally, the company talked about we expect full year 2025 total expenses to be in the range of 114 to 118 billion. So they narrow their range from a prior outlook of 113 to 118. Okay, great news. The one thing that might have scared you for Meta, right, is Zuckerberg going to go crazy with the spend again? Is he going to go completely out of control and we're just not going to be able to justify it? And when you come in, you narrow your expectations and you kind of in where you were supposed to be in? From the folks that are more in Meta for value play, because you've got two groups of investors that are in Meta stock. You have the more value investors, right, that look at Meta's forward P and then look at the growth rates and they say this is a great value. This is a great value to be a buyer of Meta stock. And then another group of investors you have in Meta stock are the growth investors. They look at Meta and they say, massive AI opportunity over this next 10, 20 years, right? They're spending more aggressively than anybody on AI. They could capture the biggest market share with their Llama models. They could capture the biggest market share of anybody in AI. They could be the biggest winner of AI, right? And they look at the revenue growth 20+%, and that attracts growth investors. And the last smaller group you have, because not many people will do both these things. Meta is now up $73 a share after hours. We'll see if it's up $100 plus a share, tomorrow. We'll see. But you also have a very, very select few that are in it that are growth and value investors. That's myself. These don't usually mix. You have to learn the disciplines. It's no different than if karate's not the same thing as Muay Thai, which isn't the same as Jiu-Jitsu, which isn't the same as boxing, which isn't the same as kickboxing, right? And so most people will just focus on one of those. But what if you could learn all the disciplines, right? And that's what I've really focused on for the last 17 years, is making sure I learn all the disciplines. What it means to be a great dividend investor, what it means to own a great dividend stock, what it means to own a great value stock, what it means to be a great growth investor and be able to identify those opportunities and run projections on where a company's revenue is going over the next 5, 10 years, right? In EPS, and understanding where their margins are going for that business model. Learning all those disciplines can help you immensely in this game, right? And I obviously teach you all those in my private stock group courses there. And so, the fact that the spend's not out of control is really good news for Meta stock moving forward. Now, when it comes to the income statement, here's what we're looking at. It's a banger. A+ income statement. It doesn't get better than this. This is like, if I'm going to show a model of like what a perfect income statement is, this is it. Revenue up, about $8.5 billion, $8.5 billion roughly on a year-over-year basis. Cost of revenue only up about 1.1 billion. That's nothing. Research and development, that was the one thing that was high. That was up about 2.4 billion on a year-over-year basis. Marketing and sales hardly up. Literally nothing. It's a rounding error. Marketing and sales up roughly $200 million, right? Revenue was up about $8.5 billion. And your marketing and sales only up about 200 million? You gotta be flipping my flapjacks. That's a holy smokers. This ain't no dang jokers. General and administrative expenses was down about $1 billion year over year. Insane. How do you grow revenue $8.5 billion roughly in a quarter, and your G&A drops by $1 billion? They're pulling magic tricks over at Meta. Total costs and expenses for this company only up, we can call it about $2.8 billion on a year-over-year basis, right? So income from operations flew to $20.4 billion from $14.8 billion. And remember, this quarter last year was a banger. Net income flew to $18.3 billion, diluted EPS $7.14. I mean, you want to see perfection? There it is for you. There it is for you. Now, very important things I noticed when it came to the cash flow statement here that I want to draw your guys' attention to, okay? Cash flow from investing activities here. Look at the purchases of property and equipment, $16.5 billion. They've already, through the first 6 months on just property and equipment, spent nearly $30 billion just through the first 6 months, okay? Remember, guys, we're not even really seeing a lot of the return on investment for all this spend yet. That's coming. So for the growth investors, just remember that part. That's key, okay? Additionally, look at how much they ramped up the repurchases of common stock. They did over $10 billion of buybacks in this latest 3-month period. That compares to $6.2 billion in the same quarter last year. They're buying heavily right? Heavily. And then we got the dividend payouts as well, $1.3 billion in dividend payouts there, okay? Now, the next question up here is Meta still easy money? And I think that's a fair question, right? Because Meta's been some of the easiest money you can make in the stock market for the last number of years. When I say the last number of years, I'm talking, basically the past 3 years, Meta's been arguably the easiest money you can make in the stock market, like anti-stress, like just beast, right? Here's the thing that's going on, okay? Analysts are way too bearish in their numbers. We look at the analyst estimates and kind of compile those, for all stocks on 1000xstocks.com, right? Analysts are far too bearish with their expectations for EPS, for revenue growth as well. They're going to have to move up their numbers likely substantially, okay? So Meta's likely trading at a forward P right now, given that the profitability numbers are coming in with way better than expected, likely trading at a forward P right now of, I would say, 22 to 24 right now. 22 to 24. Listen. Revenue growth is over 20%. It's still easy money. The stock should be up between 15% and 20% tomorrow. After that move, the stock should not slow. Wall Street should continue to funnel money into this one all the way to the $850 to $900 range. Then we can take a breather, and then we'll be talking about $1,000 next. When you trade at a forward P likely right now in the low 20s, that would be fine if Meta's revenue growth was 5 or 7%, maybe even 8%. But when your revenue growth is a do-si-do, when it's 22%, you're way undervalued. And then we think about the opportunity Meta has over the next number of years, and you come to the conclusion, Meta stock, even after this move, and even if the stock is up 15 to 20% tomorrow, will still be easy money. And it will still be some of the easiest money in the market to be made over the next year. And so, I don't know what else to say. Now, here's another thing I'll say. Microsoft's moving after hours as well on very strong results. That's going to help out the Qs. That's going to help out the S&P 500 and the momentum really in these stocks in general. So that's going to continue to push the indexes as well. Now, an issue I have is Meta's a big position for me in the public accounts, almost 30% of the portfolio. AMD's been helping me out immensely bring down that weighting, right? Because AMD's just been moving. We're now up $173,000 in AMD stock. That's been a big help. But the issue is, like, Meta's about to go way over 30% again because the stock's going to blast higher. And it's not just tomorrow's move. That's the thing, in my opinion. When it comes to Meta, we're going to, with how insane those numbers were they just posted in the guide, we're going to probably see continued momentum in Meta stock for at least 1 to 2 months straight. It doesn't mean every single trading day the stock will be up, but the overall trend for the next month or two is going to be up and away for Meta, right? Outside of some black swan event, but you could say that for stocks all the time. So, my gosh, man, like what a move, what a continued move. And then you want some more good news from Meta? Visa results. I graded their income statement yesterday. A-, very good numbers out of Visa. Net revenues up 14%. With how bad consumer confidence is, all the tariff worries, blah, 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 consumers still spending money left and right? I've been flying all over the place. Planes are busy, airports are busy, New York City's busy, everywhere's busy, man. Went to Joe's Pizza as soon as I got here, it's busy. So the moral of the story is, man, people continue to spend money, and that's great news, right?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are 3 main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best courses course curriculums teaching you everything that I got in my head. And you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there.
Google McDougal.
Capital spending forecast to $85 billion. One of the highlights of the quarter. Our Mackenzie Sagalos has more on Wall Street's reaction. Mackenzie, good morning.
Hey, good morning. Analysts liked the print, Sarah, impressed that Alphabet is still growing search and ads even as it pours money into AI. Now, as you mentioned, the company raised full-year CapEx guidance by $10 billion. Quarterly investment came in nearly 20% above estimates. And Alphabet says that it's going even higher next year. KeyBank is already floating a $100 billion estimate for 2026. And it's all part of closing the gap in the hyperscaler wars with Azure, AWS, and Meta, which says that it's building the largest compute fleet of any company. But the spend by Alphabet is backed by real demand. The cloud backlog hit $106 billion, and deals over $250 million doubled year over year. Now, analysts say that Google is reinvesting from a position of strength, scaling compute faster than rivals thanks to its custom in-house chips. So yes, free cash flow fell to $5 billion, but Bernstein called the move fashionably late and welcome. And now this raises the bar for Microsoft and Amazon heading into earnings next week. Microsoft's fiscal year just wrapped up at the end of June, so we'll be looking to see if they revise up from their $80 billion CapEx spend commitment. Guys?
Yeah, well, that'll be interesting to see if the race can accelerate even from these lofty levels. I was taken by the title of this report out of Roth about Alphabet. Big G, as they call them, wants its AI crown back. And that's such a marked turn from the discussions we were having about existential risk a couple of months ago.
It absolutely is. And while Amazon is still the cloud leader, that dominance is being challenged. You have analysts noting that as enterprise AI demand grows, spend is increasingly shifting toward rivals like Google, a trend that could definitely reshape that hyperscaler landscape. And Alphabet really did deliver a standout quarter for cloud. Revenue jumped 32%. That was well above expectations and accelerating from 28% growth last quarter. Analysts see it as a major validation of Google's AI infrastructure push, especially given those rising CapEx commitments.
Right. And in the meantime, things like YouTube and Waymo kind of get lost in the shuffle. There's just so much to digest in a short period of time. Mac, appreciate that important print on Alphabet.
Yeah, so the Google numbers were an absolute banger, first off, like absolute banger. But here's a few things to factor in here in regards to Google, okay? First off, cloud business, as you talked about there, grew 30% plus in the quarter. That's amazing. YouTube looked really good as well. Search looked good, really good as well, which, by the way, search is the business everybody's so scared of. Looks very, very healthy. Everybody's using ChatGPT, no one uses Google anymore. Doesn't show in the numbers. Look at Google's revenue numbers for the search business. Better than ever, right? Listen to a conference call in regards to all the data they give in regards to search business. Looks better than ever. So all that talk is just talk. Waymo, this is why, it's going to be really brutal for anybody to compete against Google really in this market because they have so many businesses that just throw off so much cash. And I don't even think that the thing for Google is they don't even care if they lose money in that business for years to go in the future. Tesla, on the other hand, if we're talking about the robotaxi network, they've got to make money because they don't have cash cow businesses like Google does. Google has a search business, which is a cash cow. They have YouTube, which is a cash cow. They have the cloud business, which is a cash cow. Right? They got all these cash cow businesses just throw off insane profits, right? Tens of billions of dollars. Incredible. And the profits are just building. Tesla's moving the other way. So Tesla's going to have to try to make money. Well, what do you think Google's going to do? They're probably going to undercut price again and again and again because they can do that. They've got the money to do that. They got arguably the best balance sheet in the world, or certainly one of the best balance sheets in the world. All those profits is nothing for them. There's nothing for them to just invest aggressively. And also remember, what is Google? Google's a data company. They're going to make so much money off the data and they're set. And so, people got to play these games out on a higher level here. And when you begin to play it out, you're like, shit, man, good luck competing against Google. Remember, I used to be a Tesla shareholder. I used to look at the robotaxi opportunity and everything. And then I started to understand kind of what Waymo was up to. what they had in the market for a product, how it was expanding, I started to see like, oh man, like they are not going to really actually need to make money from this, whereas Tesla's core business is declining. They actually need to make money from this. That's not a position of power, man. That's a brutal place to be. All right, next one up here.
Internet research, he raised his price target on Alphabet to $240 a share from $205. I think the concern and anxiety around this stock has been this idea that ChatGPT and Claude and all the other big LLMs were somehow going to take market share from Google. Google's saying, we're not going to have it, and we're actually doing better than you thought. Did that surprise you?
I like how you set it up, Andrew. I think you just took all my thunder there.
Sorry.
That's okay. This has been and remains our top pick in large cap internet. It's still trading at 18 times earnings, so it's trading at like 7 multiple points cheaper than Meta, and it's still at a slight discount to the market for the search leader, the YouTube, the company that owns YouTube Cloud has got this Waymo asset. I still think it's the valuation is highly attractive. Fundamentals came in better than expected, and expectations were rising. I think there's two kind of broader things the three things that are happening here. First is the ad market is kind of held in better than we all feared 3 months ago. Second, cloud market just continues to get stronger with all of this AI, generative AI demand. And then third, Google is just executing well. Give them credit for it. They're at record operating margins, even though depreciation is rising because of this big CapEx cycle. They've been very consistently managing down or flattish their headcount. And so they're showing a lot of cost discipline. I think the story is just getting stronger, and I continue to like the stock.
How much of it is Gemini getting better? I think there was a view at another point in the ball game, maybe just a couple months ago, that ChatGPT had so far outpaced where Gemini was. And I've always thought the sleeping giant here is Google, because if they're able to productize what's inside of Gemini so that it works inside of Google and Google Calendar and all of the different products, all of a sudden it becomes super powerful given the data that they have. That has yet to be unleashed.
I agree with your setup on that too. We should change roles here, Andrew. I think you got that. I think you got that right. I think the two things that were sort of lost a little bit in all this debate about what was going to happen to Google and ChatGPT and Claude and Google search getting displaced is, one, Google has this mountain of data. They've got a bigger mountain of data than anybody else with which to train, Gen AI to come up with better solutions, both on the advertiser side and on the consumer side. The second thing is this company, Google, it's not like they've been asleep at the switch here. I mean, they've been investing aggressively and talking about Gen AI for a decade. I remember watching Sundar Pichai's first Google I/O presentation about a decade ago, may have been 9 years ago, and his topic was AI. So it's the company was there. They just needed a little bit of a kick, to get going, and I think that's ChatGPT did them a service, I think, in some ways, and forced them to innovate faster, and I think they have innovated faster.
What do you think of all the CapEx spending? The market doesn't seem to be upset about it. They seem to be quite happy about it. I just wonder whether the economics of all this CapEx spending, when you start to see it meaningfully kick in, given just how high a cost all of this really is.
The basic question is there an ROAI? Are these companies like Microsoft and Amazon, Meta and Google, are they going to get a return on, what's going across the board, 250 billion in CapEx? Now, not all of that obviously is going to generative AI, but a huge chunk of it is. And there's some decent data points that have come out. I mean, Google's P&L probably gives you some data points. Meta's had a slew of them. We expect to hear more next week about how it's helped them do better recommendations, both for consumers. So the content's gotten more relevant, more personal, and people are engaging more. I mean, that's factually true. And on the advertiser side, advertisers feel that they're seeing a better return on their ad spend because they're able to, their ads are being targeted at the more accurately at people at the right time or the most actionable time, and they're seeing conversion rates rise. So there is evidence. Whether you're really going to get a great return on all of that spend, I don't know, but you are seeing a return.
Yeah, so what does all this spend mean in the end for AMD? It means very good things. It means very good things. All these companies are continuing to remain very committed to their spend, right? And a lot of this CapEx you keep hearing about, this capital expenditures, is going to go to companies like NVIDIA, and it's going to go to companies like AMD. AMD is going to be the one that really picks up a lot of share and a lot of percentage growth over this next few years from all this spend, essentially. But it's going to benefit NVIDIA as well, no doubt, right? Like both companies benefit. AMD is just going to benefit more from it in the end because they haven't really benefited the way NVIDIA has over the past few years. But, when it comes to AMD, the stock's not up 107% by accident, the past few months. Like this is about a 3.5 month chart here for AMD. It's not up 107% by accident.